session. But as promised, let's get chatting with the management of GMR Airports Infrastructure. Remember, they announced a group restructuring where they'll merge GMR Airports Limited with itself. Mr. Saurabh Chawla, the Executive Director of Finance and Corporate Strategy, currently at GMR Group, joins us on the show. Hi, Mr. Chawla, thanks so much for joining in. Well, explain to us the entire restructuring process. How are you simplifying the corporate structure? And also, GMR Airports Infra continues to stay listed, right? What assets will it hold? And are all these assets of GMR Airports being transferred to the listed entity?
This is not a restructuring of GIL. It is merely a merger of the 51% subsidiary of GIL, which is an unlisted entity in which Group ADP holds 49%. This entity is being reverse merged into the listed entity, which is GMR Airports Infra Limited. So this is just merely a merger exercise, and basically it allows the minority shareholders of the listed entity to come closer to the operating assets. These operating assets, as you may be aware, are entities like Delhi Airport, Hyderabad Airport, Goa Airport, and many other airports across the world. That's the only exercise that is being undertaken.
Okay, so I won't call it a restructuring, as you said. Let's talk about the rationale then for this reverse merger. And also, what is the total outstanding debt from Group ADP, any sort of payment outgo that could be pending? And also, how much will this entity, Group ADP, how much will it actually hold in the shareholding of the merged entity?
It's a collapse of this structure from a unlisted to a listed space. And the rationale is that, number one, it strengthens the partnership between Group ADP and GMR at the listed level. This is extremely important to understand because previously the listed entity only had 51% shareholding, and now every partner, every shareholder will sit at the same level. Post the merger, the paid-up equity capital will be shared between the GMR family. They will have about 33% shareholding, little more than 33% shareholding on a paid-up capital basis. ADP will have slightly lower, which is about 32% of paid-up capital, and the balance will be held by the public. The other rationale of this is, if you look at the finer prints, ADP has agreed to settle the earnouts that we had agreed with them when they initially came in as a 49% shareholder in GMR Airports Limited. These earnouts were where GMR Infra could earn, depending upon the economic milestones achieved over a period of 5 years, anything up to 8% of equity and about 1,060 crores of cash earnouts. What we have agreed is to settle with them these commercially to facilitate this reverse merger so that the minority shareholders of GMR Infra can further gain as we grow our airport businesses across the world.
Mr. Chawla, what is the total debt in the books currently? How will the debt picture look like post fundraise via FCCBs, and what will it look like post the merger, the reverse merger?
The consolidated debt, gross debt, is about 299 billion rupees. Cash equivalents today on a consolidated basis is about 50-odd billion rupees. And these numbers that I'm talking to you about, these are as on 31st of December 2022, because that's the time when the last public disclosure of our balance sheet numbers was made. Of this, 93% of the debt is actually by the airport assets. So, Delhi Airport and Hyderabad Airport, they have these debts on their books. About 7% of it, which is about 19 billion rupees or 1,900 crores, as on 31st of December, was the corporate debt. So what we are envisaging is, through this FCCB we will extinguish this 19 billion rupees of debt, which was standing in the books, and hence the holdco, which is the GMR Infra, which is the listed entity, will, from a corporate debt perspective, will get extinguished. That's the plan.
Okay, give us some further clarity then. In the merged entity, give us a breakup of the revenue of operations. What will be the non-airport revenue? And what is the breakup of aero, non-aero revenue split? Give us further clarity on that.
Airport versus non-airport has to be looked at asset by asset basis. It's not something that you have to look at on a console basis. You will have to, Delhi Airport, for example, has an aero business which is about 23% of overall revenues, whereas the non-aero and the commercial real estate business, that's about 62% and 15% respectively. In Hyderabad, the aero is higher. It's about 64%, whereas the non-aero is about 36%. So you have to go airport by airport. You cannot look at a console basis because that will be misleading.
Okay. Saurabh, also give us a idea about the Andhra airport. What are the timelines? When do you hope to operationalize it?
The land acquisition at Bhogapuram, which is the Vizag and Visakhapatnam in Andhra Pradesh, is almost completed. We are awaiting the formal handover of the land over there. Expression of interest for EPC has been received, and we expect RFPs to be issued very shortly. We are currently working out the financial closure. Hopefully in next month or so, we will be moving ahead. Post financial closure, it will take anything between 30 to 36 months to complete this asset, and we will be moving forward in that particular direction. So still, I would say early stage and another 3 years to go before this new airport in Bhogapuram gets completed.
Mr. Chawla, could you talk to us about the growth ambitions in the domestic business? Which sectors in terms of geographies are you targeting? What other international airports are you looking at? What are the options as far as the Philippines airport business goes?
Just purely directionally, I would say, and this is something which we have already alluded to in our quarterly calls. The domestic business in the airport has come back with a bang. We are on a run rate basis. We are above the pre-COVID levels. On the international side also, on our airports, we are almost close to the pre-COVID levels. There has been some lag as far as international traffic is concerned from countries like China, from Hong Kong, from Japan, because these countries were shut for air travel. But now as they open up, there is increasingly there's business emanating from these parts of the world also. But generally, I would say we are ahead of the pre-COVID levels. Going forward, it's very clear that the airport business is in for a good run over the medium term, and when I say medium term, I would say 10 to 15 years. And what I would allude to over here is that look at what happened in China when their per capita income was about $2,500 per person. As that per capita income increased, there was an explosion in air travel. Aspirational travelers, people who were used to earlier travel by train, they all started to opt for traveling by air. And this is notwithstanding today the high airfares. As airfares also get corrected over a period of time, new airlines start operations, and very importantly over here, as Air India revamps its balance sheet and its operations going forward, you will see much more capacity availability in the aviation sector. So it's all positive as we go forward from the airport business perspective. What is left is, okay, what are the new airports that we want to target? Well, obviously the government of India has announced its aspirations to privatize many more airports. We will surely look at them very carefully. but we will be very selective. We are going to be very conscious as to what kind of equity value that gets created at what price, and we'll be very disciplined in that particular approach.
All right, Saurabh, thank you for joining in this morning and giving us a lot of detail on that reverse merger and, of course, the